Last Friday, AMC's stock pushed into the 30s, and this brought even more attention to the company. The stock price settled back down to under 26, but by this point in time, the attention and excitement was there, and this excitement continued to build throughout the weekend. Now, the US markets were closed on Monday in observance of Memorial Day, but since Memorial Day is only observed in the United States, other markets were open, and Germany closed with AMC up over 11%. Let's talk about this wild price action that we're seeing with AMC. Let's talk about some factors that may affect it, and let's get to it. What's up, YouTube? James from Thursday Media here, and I hope many of you got a chance to take advantage of that extra market day off and rest from looking at the numbers. In this video, we are talking numbers in terms of the share count, price action, and how this short squeeze may be managed. But before we get started, I do want to take time to point out that the channel officially has bots that are posing as me. Many of you on YouTube are familiar with these bots, but for anyone new, please do not click any link provided in the comments. Any promotions that I make will be put into the description for the video, and you will also be able to tell that it's me commenting if you see the name of the channel highlighted. One of the catalysts that shareholders have been looking forward to is the share count performed by AMC. The hope has been that by collecting this data from brokerages, the company would be able to provide its shareholders with a picture of how many shares are currently bought and held and how many synthetics possibly exist. The count is set to start this week, and as data is collected, it will be provided to the shareholders. But there has been a significant amount of weight given to this share count. And to be honest, I've been looking forward to it as well. But there are a few caveats to keep in mind. First, the share count only applies to shares in the United States and Canada, so any overseas holdings of AMC will not be included. While this is a major flaw in the counting process, it doesn't mean we should ignore the information that they provide, especially if the US share count exceeds the total number of outstanding shares. It means that regardless of what number they provide to us, there are still unaccounted shares being held across the ocean. With that in mind, I don't think the share count needs to be the focus. How this information is collected and reported is kind of flawed, so it shouldn't be made into the end-all be-all for initiating a squeeze. The only end-all be-all when it comes to this channel is to hit the like button so that YouTube knows that we're still in the game. The real story to watch for this week is how much volume continues to move the price. After two very large trading days in a row last week, we are seeing this trend continue and having wild price movement. Tuesday opened with a surge to $30, and the day closed at $32.04. After hours, though, we saw an additional 17% jump in the price. The fact is, the price of AMC touched the mid-30s last week, and retail investors were striving to reclaim and hold that position. On Wednesday, that trend continued. By 12:30, the stock was pushed to $61, and a volatility halt was put into place, and this occurred multiple times throughout the day at 5 minutes at a time. We have previously talked about how these halts would show up and not to be confused by them. As soon as this halt was lifted, the price plummeted $10, most likely from panic selling, before momentum picked back up again. It's important to reiterate that a volatility halt is a safeguard put into place by stock exchanges to allow a cool-off period if a stock goes up or goes down too much too quickly. It is not your broker that stopped trading, it's just a function of the market. AMC officially closed Wednesday over $60. So for those of you that have been following me for weeks, congratulations, and I hope you're enjoying your gains. On a different note, and something that I find a bit worrying, is the number of shares being picked up by institutions recently. Recently, institutional ownership has started getting very large, which is odd because they are now purchasing it at a premium in comparison to where it was a month ago. This is the same class of people that has repeatedly said that the stock was heavily overvalued, retail investors don't know what they're doing, and yet now they're buying the stock when it's even higher. And big firms don't take positions to try and lose money. So when you think about the bigger picture, this may be how Wall Street plans to control the squeeze if it gets out of control. We can see activity this week as a prime example when AMC sold 8.5 million shares to Mudrick Capital at a price of $27.14, raising an additional $230 million for the company to acquire more theaters. Mudrick quickly disposed of these shares when the stock price broke $33, citing that the company was overvalued. Now, let's be honest, most of Wall Street, maybe even all of Wall Street, agrees that AMC is overvalued and have said this for weeks. Mudrock's move to dump their 8.5 million shares almost immediately seems silly considering that the price still moved up right after they dumped them. In my opinion, this looked like an attempt to make a little bit of money, but also an attempt to trigger panic selling. It's a sneak peek on what we could expect to see as prices continue to climb or jump to new highs. If the price of AMC begins moving up even more rapidly on some catalyst, it's not beyond reason to believe institutions will begin dumping these shares onto the market en masse to trigger a sell-off and give hedge funds some room to cover. As they cover, shares will be bought back up, the price will spike again, and another dump will follow. And we could very well see this cycle more than a couple of times. How rapidly investors eat up all of these shares will determine the impact of each dump. In the case of Mudrock Capital, they disposed of all 8.5 million shares and the stock price hardly budged, and then increased massively in the following days. So if this was a test of the strategy, it failed. Now, why would institutions bother to help hedge funds? Aren't they competing with each other? Yes, there is competition on the market, but retail investors are pushing for certain hedge funds to lose big, which will likely require the mass liquidation of their holdings. Think Archegos, but on a larger scale. Archegos' ruin caused 2 stocks to plummet, and anybody invested in those to feel burnt by it. Since we like to pick on Citadel, a liquidation of their assets would include Facebook, Microsoft, Apple, Amazon, among other big names. Clearinghouses have been trying to put in policies to help a transition of shares during a member's default, but there would still be a hit to the overall market, causing all of the big players to lose money. If multiple big name companies all take a big hit at the same time, institutions all lose big. When you couple this with the massive amount of debt that has been taken to pump up the economy, the case can be made that Wall Street is working to manage this together without creating a complete collapse of the stock market. It's just a theory, but it wouldn't be surprising seeing as how institutional long positions have grown recently, and I doubt that they're secretly apes. Then again, they could sit back and do absolutely nothing and let the stock price climb as their competition goes out of business and they pick up the pieces. To return back to that sale of shares to Mudrock Capital, AMC raised $230 million, which they plan on using to buy more theaters, specifically those of their competitors. Now, the bear case is that the movie theater business has been dying and will continue to do so, and owning a bigger piece of a rotten pie is pointless. But remember that movie theaters are an experience, and one that's likely to rebound in 2021 and 2022 after those lockdowns and pent-up demand. In a more bullish argument, movies themselves aren't going anywhere, and AMC is now financially stable enough to think about paying off some debt and transforming their business. Theaters have massive screens, top-end projection systems, premium audio, and plenty of seats. AMC is already experimenting with full theater rentals, dine-in theaters, and running old classics. Imagine if they incorporated streaming-like services, rented it out for gaming competition, or even hosted events such as AMC Ape Day. My point is that there's space to get creative, and hopefully that's something that we see going forward. Regardless, this amount of price pressure will probably lead to more squeezes, and this will cause major spikes, which will probably lead to more FOMO. So there's no telling exactly how high this will go before institutional shares begin to get dumped. It's important to keep a close eye on what happens with AMC. It would be sad if Wall Street is able to manage the squeeze, but if that does wind up being the case, it may be worth coming up with a strategy to work with it. In a more positive light, retail investors already own hundreds of millions of shares, so another 60 to 70 million may hardly faze them. I am continuing to hold my shares on Webull, but I think I'll buy one share on Robinhood just to have an active test of how they handle the situation. And I really don't plan on selling until I see those shares on loan really begin to come down, signaling that shorts have started to cover. This doesn't seem to be happening just yet as the short interest continues to rise, so retail traders are being given even more time to jump in. Just remember to have a clear exit strategy and watch the charts and price movement. But as always, I am not a financial advisor. I'm just a regular guy with a regular job, just wondering why there's so much institutional buying of AMC. So always make sure that you do your own research before making any financial decision and that you make decisions that you're comfortable with. If you're looking for a broker and need a place to start, I'll leave you some links down in the description below that'll help get you started. Some of these are even offering free stocks when you sign up and make your first deposit. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Thursday and Sunday unless I throw in a bonus. Pay very close attention to the price action of AMC. Don't rely too much on the share count. And thanks so much for being here, and I'll see you in the next one.